So today we're going to be talking about the bank deposit analysis and how this is essential to every single IRS audit. So what is a bank deposit analysis? It's where the IRS will analyze all the deposits coming into a bank account that you own, either personal and business, and determine whether the deposit is taxable or non-taxable income. Now, as you can imagine, if you're depositing cash, it's a little bit hard to tell the source of that money, whether you sold a car or whether you got paid for work that you've done. So your obligation as a taxpayer business owner is to establish that with some kind of documentation as to why the deposit was non-taxable income. For instance, if you took money from your credit line and had the money transferred in, or if you received money from escrow, it's going to be a little bit hard to tell whether that, what the source of that was and whether it should be taxable income. On the other hand, if you got a check that was deposited and IRS shows you a copy of that check image, you may be able to determine that whether it was taxable or non-taxable. And if you can't on the face of the check, you can reach out to the person who wrote you the check to verify what was the source of the income and why did you receive that money. This is really an essential part of every single IRS audit because income is really important. And when the IRS has concluded their bank deposit analysis, they should prepare a work paper and give you a total. And what they'll do is they'll compare the bank deposit analysis total to what you report on your tax return. And if the two differ, especially if there's an increase, IRS will then, of course, assess you additional taxes based upon that increase in income. They'll do this for every year of the audit. Now, if IRS only opens up the first year for audit as a test year and you have unreported income, typically IRS will open up additional years. If the amount of unreported income is insignificant or de minimis or just a small amount, then it's not as critical. They may not conclude that the same errors are occurring in other years. So spend a lot of time on the bank deposit analysis. Try to keep good records, especially if you're depositing cash. It's really hard to trace cash and tell what the source of that was. So keep good records when you make a deposit. Have photocopies of the checks you deposit, and if you have cash, make a note as to where the cash came from. If there's a contract or you sold a car, just make a note as to how you got the cash, and that'll help explain and potentially resolve the issue with IRS. I'm John Milikowski, founder of Milikowski Tax Law. I hope this information was useful.